November 6th, 2024. I was initially not planning on making a video today because I thought it was a Federal Reserve Day, but it ends up being that tomorrow is that day. So tomorrow I will not be making a daily review because that is the Fed meeting and it was not today. Yesterday was the election, and usually, uncertainty causes a trading range. And so there was uncertainty for the past couple of days as to who the president was going to be. And over last night, there was certainty because we got the answer to who the president was going to be. So I think just a feeling of certainty is a big thing of why the reason we got such a large gap up today. Uncertainty creates trading ranges, and certainty and urgency creates trends. So we had a sense of uncertainty all week since obviously we have large news coming up, and we got the news, and so that created a sense of certainty in the stock market. We got obviously a really big gap up, a 2% gap up. And I think there's a really common mistake that beginners make that there was a really good example of it early in the day today. In general, let's say the market opens, you get a bear bar, a pullback, and then a couple more bear bars. You see bars 3, 4, and 5. And what are you thinking to yourself? As a trader, or at least if you're a newer trader, you're probably thinking to yourself, oh, it's so bearish, I got to sell. I got to sell the close of 4. I got to sell the close of 5. I got to get short. I got to find a way. And it's natural to think that you should be getting short because 3, 4, and 5 is strong sell the close bars. But you have to keep in mind the gap up. Look at the size of this gap, right? So what do I always say about gaps, right? Gaps are really just bars. So what I do when I don't really look at the Globex chart. I just take the gap for what it is. It's a big bull bar. I see this as a big bull surprise. So imagine instead of a gap here, you just had a huge bull candle all the way up to here. That looked like this, right? We'll fill it in white just for the perspective of it, but you guys understand what I'm saying. Oh my God. All right. It doesn't show at the borders, but I guess if I highlight it. So now we have this huge bull bar right here, all right? You have to think of the gap as a giant bull bar. Now look at this. Does it really look all that bearish if you think of the gap as a giant bull bar? No, it doesn't really look as bearish. It looks more like it's going to be a bull flag, and then we're going to get a second leg up. So whenever you get a big gap up, you should probably be spending your time looking for the second leg up rather than looking to sell and get the gap to close. And I made that mistake for a lot of years. I would always sell in the beginning of, giant gaps up and look for a trend reversal and look to make a lot of money. The reality is it almost never happens. So when you get the gap up that's this large, you should be thinking about buying for a second leg up rather than selling for a first leg down. And I think if you've been trading for a little while, you'll recognize bars like bar 6. It's not a high probability trade, but it's a possible low of the day. So some traders will take the buy and take a chance. It's a high 2 buy, high 1 above bar 2, and high 2 above bar 6. They'll take the buy and take a chance that we're going to get a second leg up from the gap. Now, if you don't think of it as a gap and you just stare at bars 3, 4, and 5, you probably are really confused as to why we rallied after 6 today, and you think it doesn't make any sense. But it makes perfect sense. It's just that the large gap up needed a second leg up. So that's why traders were buying in that area. So I think, when you see a gap, just think the gap needs a second leg. It's a big bar. It needs a second leg. So don't concern yourself with shorting bars 3, 4, and 5. Yes, occasionally, every once in a while, you see 3, 4, and 5, and you'll just get a big collapse and you'll make a bunch of money. But that one time you make a bunch of money is going to be offset by a lot of times where you lose money, and it's really just not worth it. With that being said, I'll start the review. So big gap up, bar 1, a bear bar, but a large tail on the bottom, a tail on the top as well. Not really worth buying or selling the close here. It looks like we're going to be starting out the day in more of a trading range. Bar 2 is an inside bar. It's a high 1 buy for the bulls, but you have to imagine there's probably sellers above, although there are probably buyers below as well. So bulls, they have a big gap up and a high 1 buy on bar 2. Bar 2, again, you have to keep in mind that high 1s usually lead to deeper corrections and then to trading range, and then to trend resumption. So when you see 2, yes, there'll be traders buying above 2 with a really wide stop, but in general, most traders will wait for the second entry. 3, an outside bar, a large tail on the top and a tail on the bottom as well. Probably buyers not too far below, probably sellers not too far above. Bar 4, a big bar for the bears. It's good for the bears. We're probably going at least a little bit lower, and this should get a second leg sideways to down. However, you have to keep in mind the gap up is what's dominating the day. The bears are trying to flip the market to always in short, but it's really not all that clear. And I think they need to be, do quite a bit more for us to, or at least to convince me that we're always in short. Bar 5, another bear bar. So 3 straight bear bars, 3, 4, 5. Probably going at least a little bit lower, but probably buyers not too far down here. The 3 straight bear bars, 3, 4, 5. Should get a second leg. 6 is a high 2 for the bulls. Some bulls will buy above 6 for a swing. it's probably okay to do that and just take a chance that we're going to get a big swing trade. 7, a bull bar. So again, the bulls who buy above 6, their stop is below 6, and they probably don't watch. I would say if you're going to take that trade, you probably take the buy, you put a stop below 6, and you just walk away for a while. And maybe take a chance that we get a measure move of the opening range up. Something like this into that area. We didn't obviously quite get there, but you would have gotten close. So 7, a bull bar, but a large tail on the top. Probably sellers not too far above, probably buyers not too far below. 8, an inside bar for the bulls. So it's a high 1 in this new bull trend, right? Bar 6 is a high 2, high 1, pullback, high 2. And then 7, 8, an inside bar, a high 1 in possible bull trend. 9, another bull bar. So 4 straight bull bars, 6, 7, 8, 9. We're probably going at least a little bit higher. I'm not sure how much higher, but I know we're probably going higher. 10, another bull bar, a big tail on, or a tail on the bottom, tail on the top. Small open gap here, you could argue, with the high 1, the 8 high, and the 10 low, probably going at least a little bit higher. This is all by the close, right? So you can buy any of these closes, but you have to understand the context of what you're doing. Although we have a big gap up and it needs a second leg, 3, 4, and 5 also needs a second leg. So you can be buying these closes with a wide stop, but you have to realize that you might sit through a deep pullback. So if you're buying any of these closes and you're exiting during this pullback, this probably isn't the trade for you. So these are okay by the close bars because 6, 7, 8, 9, 10, 11, 12, whatever. Wherever you buy, it's going to get a second leg. We need a leg up from the gap, a second leg up from the gap. It could have been this, but even if it is, this needs another leg as well. So you have to be expecting us to go higher. 12, another bull bar. So 6 through 12, a lot of bull bars. Tails on the top, probably going at least a little bit higher. But again, we might pull back first. We have big down, 3, 4, 5, and now big up, 6 through 12. So we might start to go a little more sideways. 13, an inside bar. It's a low 1 short for the bears. Probably buyers below, scaling in lower. 14, another bear bar. So we have consecutive bear bars, 13, 14. Again, the first reversal down, 13, probably should fail. Yes, it's a double top bear flag, 3, 13. But you have to imagine there's probably going to be buyers on the way down, scaling in lower, simply because this is so strong. We also, we tested 18, or I guess on 19, around the swing point, the 6 high. So sometimes when you get a deep pullback, you have to be looking to the swing point, like the bar 6 high, for a spot for traders to be buying. I have something, well, assuming this closes above the moving average, I have actually something pretty interesting to say about tomorrow. But anyways, 15, 3 straight bear bars, 13, 14, 15, tails on the bottom, or tail on 14, tail on 15, probably buyers below, scaling in lower, but 13, 14, and 15 is going to get a second leg down. 16, a high 1 for the bulls, but after 3 straight bear bars, you have to imagine there are sellers above, scaling in higher. It's notable that the bulls who bought below 13 got trapped on 14, and 15 hasn't let them out yet. So although we are probably going to get a second leg down from 13 through 15, we're most likely going to get back up to this bar 11 low and around the bar 12 close. And for what it's worth, probably above the bar 12 high, since the second leg should trade at least 1 tick above the bar 12 high. 16, a bull bar. It's, like I said, high 1, but expect a deeper pullback. 17, a second leg down. So 13, 14, 15, pullback 16, and then second leg down 17. 18, an inside bar. It's a low 1 short for the bears. Probably buyers not too far below. Probably sellers not too far above. You can see buyers below 18 during 19, but a tight channel down from 13 through 19. So again, while there are probably buyers somewhere down here scaling in lower, we are getting a reasonably tight channel down. 20, a bull bar, put a large tail on the top, triggering essentially a high 1 above 19 because we haven't traded above another bar. So you could argue it's 3 pushes down, 1, pullback 2, pullback 3. You could also argue it's just a high 1 on bar 20. 21, a big bull bar closing near high. So if we're going to rally, the reality is we're probably not going to go back below here. This is a good looking bull bar, and it's good enough for me to think if this is going to get a good looking second leg, it's starting here. So it's a strong buy above 21, expecting a second leg up. Can you put a stop below 19? Yeah, you can put a stop below 19. You can also just put a stop below 6 and kind of watch the price action. But I think it's reasonable to buy and put a stop below 19 as well. 22, a bear bar. Probably sellers initially above 21. Why? Because of the tight channel down. We have three legs down from 13 to 19, but it's a pretty tight channel. So you have to be expecting somewhere down here, there's going to be buyers, but also, again, buying the close of 21, you have to expect a pullback. So 22, a bad low 1 short, probably buyers below. You can see there were buyers below during 23, and we got rallied back up. 24, a bull bar closing near its high. A possible second leg up from the rally to 21. 25, another bull bar, a tail on the top. Again, probably still going at least a little bit higher. 26, another bull bar. So 3 straight bull bars, 24, 25, 26. We have potentially a couple of legs up, right? 1, pullback 2. But the reality is we're around a little bit of resistance, but we're probably going higher. We're also 26 bars into the day and we haven't touched the moving average yet. And I think it's really important. I would actually be interested to see if this will close above the moving average. 1 second. Okay, so it closed basically at the moving average, but not quite below it. One of the highest probability trades that exists is when you get a bull trend day like this. So really, really, really strong bull trend, and it does not close below the moving average the whole day. So we didn't close below the moving average until bar like 81, and even then, I'm not really sure this qualifies. So for me, what would I like to see tomorrow? I'd like to see a gap down to around 50%. If we get a gap into this area, I'm probably just going to buy the open instead of target for somewhere up here and a stop somewhere down here. And I would be 70% confident that we're going up here before we're going back down here. So any sort of gap down tomorrow, I'm basically going to look for a bear bar to buy the close of and look for a second leg up. Because the reality is this whole thing on like a 30-minute chart, we'll just look at it. Look how strong it is. Right? We'll even go to an hourly chart that might even display the point even better. Right. So if we get a gap down to here, what's going to happen? This is going to get a second leg up. So tomorrow, if we get a gap down to around 50%, I'm going to be pretty eager to buy the close, some sort of bar. I don't even normally trade Fed days, and tomorrow is a Fed day, but I think, this is a special situation where if you get something that's, this is one of my favorite trades that I ever, I've only see it like maybe twice a year where you get this type of bull trend day and then you get a gap down. So I'll be excited if we get that tomorrow, since it's a very high probability of success type of trade, but we'll see what ends up happening. 27, disappointing. So 24, 25, 26, 3 straight bull bars, probably going at least a little bit higher. In general, if the market hasn't broken out yet, it tries to break out of the trading range around bar 30. So that could be what we're doing. 28, buyers below 27, bad low too short. 29, probably sellers above 28 during, at least initially. And 30, a bull bar, probably buyers below, scaling in lower. And you can see there were buyers below during 31. 32, an inside bar, probably sellers above, probably buyers below. And then 33, a big bull bar. It's possible 27 to 32 is a final flag. We're getting a breakout above the final flag. Additionally, it's 3 legs up. The first leg to 21, the second leg to 26, and the third leg is 33. So a possible 3 legs up and a breakout above the final flag. We're probably going to pull back first. 34, a big bear bar, but again, just to break back into the area of the final flag. There's probably buyers below somewhere, scaling in lower here. And again, we haven't gone below the moving average. So you have, essentially invincibility buying up here because you know that, if we do go below the moving average, odds are high that the first close is going to get bought. So we're also forming a triangle, right? And we tried to break out above, we're trying to break back below, and then you can see we ended up drifting higher. 35, bull bar and inside bar. It's a high one for the bulls. It's a tight trading range from 27 to 35, but probably buyers not too far below, probably sellers not too far above. Another bull bar, 36. So consecutive bull bars, 35, 36. We're probably going to rally at least a little bit higher. Disappointing follow through 37. It's okay to be long. We are always in long. For what it's worth, I think we were always in long the whole day. I think 3, 4, and 5. 5 was trying to flip the market to always in short, but the bears needed one more good looking bar and never quite got it. So we ended up getting buyers there. 37, a doji bar, like I mentioned. 38, bears trying to get some sort of triple top. 27, 33, and 38. But really what's important is that this, tight trading range, and we're probably going higher, always in long. So you can buy the close of any of these bars and just expect us to go higher and wait until we get a close below the moving average to exit. And if you did that, you would be exiting basically at the end of the day. So if you bought for any reason, just planning on exiting when we get below the moving average, which is a reasonable thing to do after being above the moving average for 40 bars, you could just hold and you probably would have made 15 to 20 points, which is a good day. 39, another bull bar, but a tail on the top. We're probably going at least a little bit higher. 40, a bull surprise to the new high. So we're breaking out to a new high of the day. Let's see if the bulls can get follow through. Inside bar, disappointment, 41, and then consecutive inside bars, 42. So a high one buy on 42. Keep in mind, 42 is consecutive inside bars, which is a triangle on a lower time frame. And triangles on lower time frames are magnets. So probably going to lead to a pullback and then trend resumption, since it's a high one. This is what I meant to say. High ones in general lead to deeper pullbacks and trend resumption. So you can see we got a pullback below 42 during 43 and an outside up bar going to a new high. 44, consecutive bull bars, 43, 44. We're probably going at least a little bit higher. It's 3 pushes up. So expecting at least a little bit more. 45, another bull bar, 43, 44, 45, 3 straight bull bars. Again, we're probably going at least a little bit higher. 46, another bull bar, still buy the close, buy for any reason, decently wide stop, and just hold for a measured move. So okay to just buy the close, look for a measure move up, and there's really no reason to exit anywhere in here, and you probably end up exiting as bar 69 is forming. 47, buyers below 46, not all that surprising. And then 48, a bull bar closing near its high, trading above 47, high one buy, probably sellers not too far above. 49, another bull bar, consecutive bull bars. And then 50, an inside bar, low one short, disappointing, probably buyers not too far below, sellers not too far above. 52, another bull bar. Again, it's just buy the close all the way up. It's a small pullback bull trend. We think about, look at the pullbacks we've had. So obviously early in the day, we had the rally up to 12 and then a wedge pullback. Great, right? But small pullback bull trends generally have pullbacks that are one or two bear bars. And ever since we got the rally on bar 21, which 21, as I mentioned, is important because if we are going to end up rallying, 21 is probably the start of it, considering we shouldn't get a super deep pullback to below the 19 low after bar 21 if we're going to rally. So after 21, how long is the deepest pullback? 2 bars the remainder of the day. So we stayed in a small pullback bull trend for the rest of the day. So as long as you're not getting 3-4 bear bars in a row, you can still argue that we're in a small pullback bull trend. It was more likely we were in some sort of trading range in the beginning when we got the rally to bar 12 and then a deep pullback, but we probably still had to get that second leg, and the second leg ends up turning into a small pullback bull trend. 53, buyers below 52 scaling in. 54, a high one buy for the bulls, but a bear doji bar, so sellers above during 55. 56, a second leg sideways to down. And then 57, sellers above. 56, 58, an inside bar, probably sellers above. Again, tight trading range. We basically just go sideways here. And this, we have a tight trading range over here. And we have a tight trading range over here. And then you can see you got a breakout 66, 67, 68, 69. So you can buy these closes, but again, because we haven't been below the moving average, but again, it's climactic, right? So you're buying pretty late in a bull trend. And these are pretty climactic bars. So, how high do we think we're going? Well, one of my issues with buying up here is the obvious magnet above is 6,000, but it's too far. So if you're buying this close, you're kind of trying to get a measure move up into no man's land. So a little bit difficult, but still reasonable to be buying. And then disappointment 69, some or 70, some bulls just exit below. They buy the close. They're hoping for immediate follow through. They don't get it. They get out. Some bulls wait for the second leg. You can see 73 rallies back up to the close of 69. So the bulls who bought the close of 69 didn't exit here, got a deep pullback and were disappointed. But are you exiting here? No. I mean, you have a good looking bull spike and we haven't been below the moving average yet. So this is what I'm talking about with thinking about bigger picture context and not being scared up by one bar. If anything, you want to be scaling in, buying more below 69, and then using 72, 73 to get out of your initial longs. And then we get a deeper pullback. So one pullback, two. So a two-legged correction and the second leg up or sideways till the end of the day. As far as stop orders go, I would not sell these closes 4 and 5. It's probably theoretically okay. But for me, I am not taking that trade. You could buy above 6, low probability. If you'd like higher probability, wait for 9 or 10, something in this area. You could buy these closes. But again, you have to recognize this is getting a second leg. So we should get a higher low because 6 through 12 is really strong. But this is going to get a second leg, so we might get a deep pullback. I personally would not sell any of these. It looks more like a pullback for the bulls to me than the start of a bear trend. So 3 legs down. And then 21, you can buy the close of 21 since it's probably the start of the second leg. However, the channel down is tight. It's the same problem as over here. The channel down is tight. So we're probably going to get a higher low before we go too much higher. And you can see we ended up getting the higher low 23 and then rallied. This is all buy the close, tight trading range. And then you can buy any of these closes, tight trading range you can buy. So pretty much no real reason to sell today. If you were selling, it was probably either you got trapped early or you tried to sell for a scalp somewhere in here, but it was probably just better to look to buy the entire day. For limit orders, buy below anything. I mean, you can buy below, it's hard to do limit orders in here. You can definitely buy below 22, you can buy below 30, you can buy below 42, better, 46, maybe 52. But again, it's as you're getting further and further up, it gets less and less good. As far as the daily chart, we are at the all-time high. Obviously, with Globex, this is a really big bull surprise. Obviously, we're going to 6,000, right? The question is this whole thing a final flag? And we're breaking out above a final flag, because if we are breaking out above a final flag, we could touch 6,000 and get a violent reversal down. I don't know if that's going to be the case. This is a really strong breakout. It might be the case, but we'll see either way. The weekly chart, big bull bar closing near its high, probably going a little higher, but the bulls are hoping to get it to close on its high, and the bears want some sort of bear close. The monthly chart, obviously we have the big bull bar closing near its high. The last time, so the review is over. This is just going to be something about my personal opinions, but the last time Trump was in office, he cut interest rates a lot. He put a lot of pressure on Jerome Powell to cut interest rates. And that is a big piece of the reason why the stock market went a lot higher when Trump was in office, is because he continuously put pressure on Jerome Powell to cut interest rates. And which is, it is what it is. And that obviously, the more you cut interest rates, the cheaper money is, the easier it is for people to borrow money, the more business is generated, the better the economy does. But obviously, you can't just cut interest rates forever. It's a whole different discussion. But anyways, he put a lot of pressure on Jerome Powell to cut interest rates, and Jerome Powell did cut interest rates. And so it's possible that in this next term, he does something similar, which could obviously create a pretty large rally for the bulls in the stock market. Now, granted, I don't know. This is really parabolic, and we probably need to touch the moving average at some point. But if, I just don't see how it would make sense for the Fed to cut interest rates when we're at we're at an all-time high. Again, I'm not an economist. I'm a college dropout. I can read a chart, but I'm not going to pretend that I'm some super knowledgeable person on politics or anything like that. So feel free to take my opinions and throw them out the window. But just for me, I've noticed that you can't really cut interest rates when the market's at an all-time high. It doesn't really make any sense to do so. You're supposed to cut interest rates as the market goes into recessions, and you're supposed to raise interest rates as the market starts to move too quickly to the upside. And the market is obviously moving quickly to the upside. So cutting interest rates would seem illogical to me. Again, I have no idea what's going to happen. I don't know anything about, politics really. But it just seems to me that with what happened the last time, with the pressure that was put to cut interest rates, it's possible that happens again. So I'll be interested to see. Tomorrow is the first. I guess I don't know. I don't know exactly. I think he gets sworn in on January 1st. So I guess it's technically be the last Fed meeting for Biden's presidency. But I would imagine they're probably going to hold rates steady tomorrow. I don't see any real reason why they would increase rates. Well, and there's certainly no reason for them to decrease rates. So I'd imagine Fed rates will be held steady for quite some time. All right, that's going to be the video.